With more and more people believing that South Africa is in a recession, the second quarter, of course, showed contraction. We could very well see contraction in the third quarter of 2015 as well. How many companies can consistently manage to grow earnings ahead of nominal GDP, regardless of the economic cycle? We're looking for recession-proof shares. This is The Moneymakers. I'm Bruce Whitfield, and tonight I'm joined by Moneymaker par excellence, Dr. Adrian Saville, the Chief Strategist for Citadel, who's done research into South African companies that have managed to sustain and grow earnings between 1997 and 2013. Coined the exceptional exception, these are companies that should make money even with economic contractions. Okay, so 1997 to 2013, you've got a list of companies that made a whole bunch of money, regardless of what happened in the cycle. But past performance is no guarantee of future performance. So the payoff line goes, Mr. Saville.
Past performance isn't a guarantee of future performance, but what you do get in terms of a hint about future performance is when you look at the attributes of the businesses that have delivered these results in the past. And the fact that they share common attributes and that these attributes aren't unique or specific to South Africa. In fact, we borrow our research initially from an international study looking at 5,000 companies over a decade. That study stopped at $1 billion market cap, which meant it excluded many South African businesses. And for that reason, we reproduced the research in South Africa. There was also another possible objection to Rita McGrath's work, which is the 10-year study, and that was she started in a year, and there might be some base effect or problem with that start year. So we put in 7 different start years. And of those 7 start years, each of them had a 10-year rolling period, and we survey all JSE listed companies for the entire 10-year period.
Did you come up with a huge and magnificent list, or just a sweet little selection?
That's the real gem. It's a sweet selection, and most of the names.
So the vast majority of companies then fail to outperform in through economic cycles. You've really got to be very selective.
Most companies, we need to be careful about saying, don't outperform, because in terms of investment performance, they might hold up. They might become the subject of investors' love or investors' scorn. In terms of their ability to sustain top line and bottom line earnings, it is a very, very unique set.
Okay. How many are there?
Of the, well, we've got 15 years of survey, and every single JSE listed company. So you're talking about,
over that period, 500 companies. Some came, some went.
So you're talking about better than 5,000 company years of data, and of this there are 6 businesses.
Only 6.
6 businesses that we have described as outliers or achievers of escape velocity. And notably, there are only 2 JSE listed companies that have produced 15 years in a row uninterrupted earnings growth.
I'm trying to think who they might be. EOH has got to be one of them.
EOH is certainly one of them.
Okay, and the other?
Clientele Life.
Clientele Life. Now that comes from left of field.
Only 2 JSE listed companies. That doesn't mean others haven't come very close. They've done 9 out of 10 years or 8 out of 10 years. But for the entire 15-year survey, only 2 businesses. And notable is that they share these common attributes. They are off the radar, that if you go back 15 years and you say, well, tell us who the 2 companies are going to be, it's not likely that you would have chosen those 2.
But that's the thing. People who looked at the resources super cycle, and they would have chosen a BHP Billiton at the time. They would have chosen a Standard Bank, which was just coming out of the takeover bid by Nedbank. And they would have done okay out of those. They would have done absolutely fine. But the standout, the stellar performers. So the attributes then that make those 2 stand out, is there any guarantee that they stand out for the next 10 to 15 years? Well,
the fact that our research resonates so strongly with the work that Rita McGrath has done, and the fact that we stopped the research 2 years ago, and so we've now got 2 years out of sample observations, and guess what?
They continue.
They continue. So in terms of this being an unusual set of businesses, one of the outliers, one of the 6 outliers is Wilson Bailey. So WBHO, a construction business, has produced this really impressive track record. That too, sort of defies, it almost defies logic.
But yet, when you look at share price performance, Wilson Bailey Homes has been dragged down through the sentiment that is so negative toward the construction sector. Yet, that is completely illogical, which suggests that as a value investor,
there might be something there.
You need to look at that very closely.
So Wilson Bailey Homes' track record has been broken now, and that's because of the economic cycle which got in their way, and they've been dragged down in sympathy with the sector. But notably, whereas Aveng, for instance, released a R500 million loss, Wilson Bailey announces that their results would be somewhere between -5% and +5%.
Okay. So
completely different results.
Completely.
Yeah.
No, but so a really solid operator. So we've got EOH in there, we've got Clientele Life, we've got Wilson Bailey Homes. What are the other three in your top six?
Famous Brands, which has been steadily built over the years through Acquisitive.
But now that's an interesting correlation, isn't it, with EOH? EOH is an acquisition-built business, and Famous Brands has done exactly the same thing. But it's
Wilson Bailey and Clientele haven't.
No. But the scale of Famous Brands is different, isn't it? Because EOH can buy big tech companies and just add them onto its platforms, whereas Famous Brands has kind of run out of many opportunities. It did Wimpy, it did Mug and Bean, and now it's doing the shrapnel on and hoping to grow
and going
the likes of
cross-border.
Tasha's and others. Yeah.
Yeah. And the other two in this set of six are retailers, Mr. Price and Truworths.
Now, Mr. Price, just recently, though, made a boo-boo for the first time in living memory, and they got their fashion mix wrong for the winter of 2015, and actually reported a big disappointment in sales growth.
Yeah, not the earnings, but the sales. And Truworths also has hit headwinds because of fierce competition. So, you know, to go back to your earlier question, the fact that they have done this in the past, does it assure us that they will continue to do it? There is no guarantee, but not only can we take the past as a possible guide, it is critical that they retain these central ingredients that we find common to the South African businesses and that resonate with Rita McGrath's businesses. And helpfully there's just two ingredients.
And those two ingredients are?
The one we collect is a collective of attributes that we've described as agility, and the second is a set of attributes that we've collectively described as absorption.
Okay, explain it.
Agility means, or can be identified as taking lots of small bets. They tend to be bottom-up businesses. In other words, the information comes from the bottom to the top, not fed from Bosberats, and this is what we will do for the next 5 years.
So that's classic Famous Brands and probably classic EOH as well.
And Mr. Price.
And Mr. Price, yes.
And Wilson Bailey. Go and look at their construction sites. They've got their sleeves up and their hands dirty. So they're taking lots of bets. When they take bets, their bets are always small first, and then they only do big ones. So as a lovely case in point, one of my favorite examples is Clientele going to Nigeria, where Clientele just lost their way. They could sell insurance, but they couldn't collect the premiums. That's a guaranteed loss leader.
It's a tricky way, yes.
And Telkom went to Nigeria. The one business lost 15 million rand, the other lost 10 billion.
Yes.
So Clientele comes back, they say, that's not going to work, let's try something else. And they can try lots of something else's. And when a small something else starts to work, they then pack in and fire the bigger ammunition. They tend to have, in terms of absorption, they tend to have very stable leadership. They grow their own timber.
Now that's interesting as well, because here, I don't know what's happened to Clientele Life's leadership. They are desperately under the radar. But EOH is, the founder is still in charge.
Asher Babot is there.
Kevin Hedderwick is the guy who's taken from a 60 million rand company to a 10 billion rand company.
Wilson Bailey the same.
Wilson Bailey Homes the same. But changes in recent times at Mr.
Truworths
Price. And Truworths is undergoing possibly the weirdest succession plan ever. It's like Michael Marker's waiting on a month-by-month basis till the new man from France is ready to take over.
So there might be a clue there as to, that ingredient might now be missing in Mr. Price and Truworths. The other, alongside the very clearly communicated succession and stable leadership, is they grow their own timber. They know how to develop, guard and retain
Truworths hasn't done that. They've gone outside to a foreign guy who
with this
ran
most recent hire,
a Mr. Price type business in Europe, which is different.
So in terms of these attributes, I would treat that as a misstep.
Okay. So, but there are only 6 in this universe. It's a nice little ETF opportunity, if you like. Can you put 6 companies into an ETF? We can just create a little portfolio of 6 companies. What would you expect to make? What sort of returns would you expect to get over a 5-year period, say, out of those 6 companies? If you put them into a little portfolio, could you grow them at 15% a year?
The most powerful determinant of the terminal value of a business is its earnings engine. And if we imagine that we start the business when sentiment is normal and we start the investment when sentiment is normal and finish the investment when sentiment is normal, these businesses have grown their earnings over the 15-year period at an average of 25% a year.
But we're not in normal times, or maybe this is normal.
Well,
maybe this is the new normal.
Maybe this is the new normal. But we don't have to start this investment today. We can have started it at any time over the last 15 years, and your average earnings is in the order of 25%, which is 10 percentage points in excess of the JSE. Apply a normal multiple to that, 10% per year is going to double your money versus what you would otherwise have got every 7 years. So if we both start our portfolios today and yours gets to from 100 to 200, mine will get from 100 to 400,
yes,
using that same earnings engine.
Is there not a risk here, though, saying, okay, so these are the top 6 performers over the last 15 years, a little bit like looking at last year's best unit trust performer and going, I'm going to give my money to that fund manager because they're a genius unit trust manager. They just hit the cycle right.
What we've done, Bruce, in terms of the research is we can map the entire JSE, and we can not only identify where a business is right now in terms of quadrant 1, 2, 3, or 4, but we can also identify where it is relative to its peers, and we can identify its migration path. And that tends to be a pretty good predictor of what's to come.
Now, succession battles will happen at EOH at some point in the not too distant future, and at Famous Brands in the not too distant future. It has to happen.
If they are true agile absorbers, it won't be a battle. It will be well established, clearly communicated, and in all likelihood it'll be internal rather than external.
Okay, so we've got Famous Brands, EOH on this list, Clientele Life. We've got Mr. Price and Truworths and Wilson Bailey Homes. Those are nice companies.
Yeah, and perhaps just to add an element that we haven't touched on, and that is, what about the businesses that don't have agility and absorption? So I spoke about these 4 quadrants, and
last point,
we talk about the agile absorbers and we talk about the death zone. If we look at the death zone last year, these are some of the businesses that were in the death zone last year. Chemspec, which is in business rescue. Yes. Evraz Highveld Steel.
Yes.
Gajima, recapitalized a number of times.
Yes.
A platinum business, which I can't name, but is under incredible financial stress. A construction firm that has been put into business rescue. African Bank.
There we go. So it works. There we go. Dr. Adrian Saville, Chief Strategist for Citadel, this evening on The Money Makers with some great guidance on how to pick winners over the longer term. Thank you for watching. There'll be more advice about shares and how to beat economic downturns next time on The Money Makers with me, Bruce Whitfield. Until next time, bye-bye.